In money matters, the JSE All Share Index is down for a fifth day, trading below the 75,000 level, not seen since late March. For the week, the local index is heading for a nearly 5% loss. The rand is also trading low at around 18.65 at midday trade. Integral Asset Management Chief Investment Officer Keith McLachlan joins us now for the latest market moves. Thank you very much, Keith, for your time this afternoon. Let's start with an overview of how local trade is faring so far today.
Well, you touched on it quite accurately. It's negative across the board. Looking globally, markets have been struggling to price in sticky inflation, higher interest rates, and coming risks of recession, and really it's bled into local markets. Despite the rand weakness, commodities are down, and our stock market has followed it. Rand hedges might be outperforming. Remember, there's a large component of the JSE that either earns offshore or are in fact offshore companies. So they tend to like rand weakness. So when we have a weak rand and a weak market, you need to know in terms of dollar terms, those shares are down quite a bit. So really the best way to summarize it is it's been a bad week and it's currently quite a negative market.
Does that then explain the rand weakness in the last 12 hours?
Not necessarily. So it's less rand weakness and more dollar strength, which I know sounds counterintuitive. It sounds like I'm saying the same thing, but it isn't really. In the States, the Fed has really reiterated their attack on inflation, and that's simple. They've got one blunt instrument, that's interest rates, that they're going to use, and they foresee more hikes. Now, what that does is it threatens recession. It also creates interest rate differentials that really weaken the currency and suck capital into the US dollar. And that is reflected in terms of a weak rand. So a good way to check whether it's rand weakness or dollar strength is in fact to look at our currency against the Australian dollar, because both our currency and the Aussie dollar will be heavily influenced by commodity movements, because we're both commodity orientated economies. And whereas our rand is weak against the dollar today, in the last 12 hours it's actually pretty much flat against the Australian dollar. So this is not really rand weakness, this is dollar strength.
Okay. It looks like there are more developments around the MTN and IHS saga. IHS is afraid that MTN could team up with another investor or parties to launch a hostile takeover of the Nigerian tower business. What's driving concern?
So some background is important here. MTN really vended in their infrastructure tower business into IHS in return for more or less a 26% shareholding in the tower company. Now they throttled, through a shareholder agreement, MTN's voting to only 20%. What MTN is pushing for is equal treatment of its shareholding relative to other shareholders, which does not sound like an unfair request. It sounds pretty normal. IHS's pushback in terms of worrying about aggressive takeover seems to be more IHS's board protecting itself. Because first of all, IHS's share price is down. It's basically halved since their listing, since their IPO over a year or two ago. So the board is underperforming, management's underperforming, IHS is doing badly in the market. Would a takeover be anything more than a normal functioning market where values are sought to be unlocked? That said, MTN is not, at this point, as far as we're aware, as far as anyone is aware, MTN has not pushed for a takeover. All they've pushed for is equal voting rights, equalization of governance and the like. This latest push by IHS seems to be more the board protecting its own turf at IHS, and it feels quite disingenuous in our view.
Steinhoff Investment Holdings have published their interim results for the 6 months ended 31 March 2023. Has the drama surrounding the firm overshadowed the performance?
Yes and no. I mean, what performance? Here we have a company that really it's tried to turn itself around and it's failed. What we have is we have a deal where effectively the company is going to be handed to creditors. Shareholders are unlikely to get anything, and the remaining assets will be sold, liquidated, realized, and cents in the rand, or at least cents in the euro, because they report in euros, will be paid to those creditors. You know, if you have a look through the financial statements, they really report it on a liquidation basis. It's IFRS statement for investment holding companies where you fair value the balance sheet. They've got a deficit on the fairly valued balance sheet against their liabilities, where assets are less than liabilities by about almost 3 billion euros. So these are less results more than they are a formality in terms of publishing them. Here, this is a company that's unlikely to do anything other than to go to zero.
Thank you very much to Integral Asset Management Chief Investment Officer Keith McLachlan.